Welcome everyone to today's final session, Blockchain the Worldview. We'll find out what in the world is happening to blockchain. We're going to go all over the globe today. Our speakers will delve into the international principles and reforms impacting the development of the blockchain ecosystem. Firstly, though, I want to welcome Kelly Sims, the Assistant General Manager, Client Group at Austrade, and then we will move on to our panel with Carolyn Malcolm, Marc, Taverner, Anson, Zeall, Ekaterina, Anthony, and Sian Jones. Please take the stage, Kelly.
Thank you so much. Hi, everyone. As Amy said, I'm Kelly Sims, the head of Born Global at Austrade, the Australian Trade and Investment Commission. I'd firstly like to acknowledge the Wurundjeri people of the Kulin Nation, who are the traditional custodians of the land that I'm on tonight, and pay my respects to their elders past, present and emerging, and extend this respect to any Aboriginal and Torres Strait Islander people who are participating and any First Nations people from around the world who are dialing into Blockchain Week. Austrade has nearly 70 offices in 47 countries, and we help connect Australian businesses to the world and the world to Australian businesses. We're thrilled to be supporting Blockchain Week under the Australian government's $9.6 million FinTech trade and investment program, which was launched late last year as part of the digital business plan to Australia's economic recovery. Austrade and Treasury are the lead agencies for this work, along with our industry partners, including the amazing super connector that is Steve Vallis and the Blockchain Australia team. Our message is really simple. Under this government and industry partnerships, we're here to help Aussie fintech and blockchain companies who want to win international business, international customers that want to access Aussie tech, and foreign investors that want to invest in the Australian fintech and blockchain ecosystem. So contact us directly through our team who are here at Blockchain Week, myself, Gaurav Jory and Annika Barton, or via our advisory centre or through the Blockchain Australia team. We'd love to hear from you and to engage you as part of this initiative. On that note, I'm really looking forward to this panel, and Carolyn, I'll hand back to you for Blockchain the Worldview.
Thanks very much, Kelly. Very, very excited to be here. We've got an exciting discussion coming up, but I also just want to start with a quick acknowledgement of the traditional owners of country throughout Australia. Obviously, many of us joining us now for this session from all around the world, but very important that we recognise their continuing connection to land, waters and culture, and we pay our respects to their elders past, present and emerging. With that, I'd like to get the discussion underway. I'm Caroline Malcolm and I'm really excited to be here. I was the founding head of the OECD's Blockchain Policy Centre and now focusing specifically on what blockchain and crypto means in the tax space. And that's really starting to hot up, as we just heard in the previous session, if you're able to join that. But today is not really about me, because we have an incredible lineup and we're here to hear about what's happening all around the world when it comes to the developments and trends that we're seeing in the global blockchain ecosystem. We've obviously had some really exciting news from the earlier sessions today at Australian Blockchain Week. In particular, the announcement from Senator Bragg to drive a regulatory framework for digital assets in Australia, which is certain and stable. We'll hear about how the rest of the world has managed to move forward with that objective. And also in the last 24 hours, obviously, we've also heard about the proposal from the UK to develop a brick coin coming from the UK Chancellor Rishi Sunak. So there's a lot happening in this space. Blockchain is one of those areas where, you know, just in 24 hours, enormous things can happen. It sometimes can be difficult to work out what to keep up with, what are the most important and pressing developments that you need to know about. But that's exactly why this session is to hear firsthand from people and ask questions. We'll get to how you can do that in a minute. To ask questions about what's going on in the world, what should you be paying attention to, what's going on in these different jurisdictions. So a couple of housekeeping things. First, of course, please keep your microphones on mute. And secondly, we are recording this session. I do invite you, though, to, if you have any questions throughout the session at any point, type those questions into the chat, and also just jump in there, say hello, let us know where you're based, understand, so that we can get a better understanding of where you're all from. And we can think a little bit about that as we move through the discussion today. So please, as I said, enter any questions you might have into the chat part of the Zoom there. But now I would like to get started. We've got Marc, Sian, Anson and Ekaterina with us, and I'm going to ask them all to talk a little bit for a few minutes about where they're coming from, the jurisdictions they're working in, and what are some of the biggest developments we've seen in that space. And then we're going to have a little bit of time for a discussion between the panelists and also bring in your questions from the audience. But to get started, I'd like to invite Marc Taverner. Marc is the Executive Director of the International Association for Trusted Blockchain Applications. You might know it as INATBA. He has worked for 7 years in the blockchain ecosystem, which basically makes you a veteran in this space. And working across a diverse portfolio of clients. He initially helped to scale early Bitcoin miners and equipment manufacturers, then through to data center innovators with high-density compute solutions, chip designers, and blockchain analytics. So Marc is really someone who's done it on the technical side, also seen the policy, regulatory perspective, and so he's got a really interesting perspective to bring towards us today. So Marc, with that, I'm going to hand over to you and ask to talk us about a little bit of what you're doing at INATBA in Europe and of course across the world. Thank you.
Well, thank you, Caroline. Good morning, good evening, good afternoon, depending on where you are in the world. And Caroline, I just want to say thank you. That's the most pleasant introduction I've had and the nicest thing I've been called all day. It's far too flattering. As Caroline quite rightly said, my name is Marc Taverner. I'm the Executive Director at INATBA. We are a trade association representing the blockchain industry. I see a number of our members on this call today at this event. And I just want to go back to the work that Steve has been doing at the Blockchain Association of Australia. I've never met someone that works as hard or is as well connected as Steve, and I'm very delighted to have been invited to this event today. So what do we do at INATBA? We work at the intersection of public and private engagement around blockchain. And my goodness me, some of the things we're working on at the moment. So we've got approximately 170 companies as members, 25 governments sitting on our government advisory body, and 45 plus academics working on our academic advisory body on a range of topics. It has to be said that regulation and finance applications are dominating our agenda at the moment. There seems to be a regulator, a Brit coin, a China coin, a US coin, a Euro coin coming out at a rate of knots at the moment. And given that we've got over 2,000 plus cryptocurrency coins at the moment, it seems slightly honteux, as we say in French, slightly shameful that governments are just so late in launching their own coins. We've got Dogecoin advertising jerky and all sorts. So, we're really, I'm being a little facetious for those of you that have not met me before. Humor tends to be my leading edge, followed by substance afterwards. And on the substance side, we have been engaging on the raft of proposed regulation, legislations, and government strategies dominated by the finance sector, but stretching across healthcare, climate action, government platforms as well. We see a lot of focus on government platforms and standards being created, taxonomies being adopted so that the technology can be rolled out at a whole country or indeed a whole region level. And applications also that are slightly more honorable perhaps than just purely making money, such as trying to support supply chains and finance systems for very small farmers, independent farmers with little access to finance in some of the world's most developing nations. So we're working across a very large gambit of applications and use cases. And I've got to say that I'm as yet undecided whether the enormous focus from regulators and governments is in fact a help or a hindrance at the moment. So Caroline, I pass the floor back to you with that rather, what I think might be a contentious question to introduce the other speakers.
Absolutely, Marc, but you're not going to get out of it that lightly. I have to say, I've never heard someone in Europe give a talk about blockchain in recent months and not mention MiCA. So maybe just for our audience, you can give a little bit of a quick introduction, a minute or so to tell people what MiCA is and what we can expect.
Yeah, absolutely. And thanks for bringing it up, Caroline. So MiCA is part of 3 pieces of proposed regulation that the European Commission, which is the public service arm of the European Parliament, has recently created. They've drafted proposed regulation on the market in crypto assets, shortened to MiCA. And the objective of MiCA is it was introduced actually into Parliament on the 26th of September. And is currently being debated by the politicians and going through various stages. The objective is to harmonize an approach towards the treatment of crypto assets and crypto asset service providers in the European economic activity area. So for the first time ever, In the parlance of our industry, this would provide legal certainty to the operators in that industry. And the objective from a European perspective is to try and position Europe at the forefront of this industry by creating an environment where operators know what the rules are, can understand how they can be compliant with the rules, and thereby, I guess from Europe's perspective, they seek to attract innovators to their shores such that they can create jobs, create innovation, and become a bit more attractive at the global level. There are a couple of other pieces of proposed regulation that were introduced at the same time. The DLT pilot regime, which seeks to create effectively a sandbox using blockchain technologies for traditional finance applications. That's a piece of proposed regulation that accompanies MiCA and is traveling through Parliament at the same time. And then DORA, which is really more appropriate to large technology platforms and seeks to provide a little more governance to those technology platforms, the likes of which are the fangs out there. So that's the short take on that, Carolyn, as you asked. And we're doing a lot of work on it as INATBA, as you can imagine. I'm actually only 18 years old. I just look like this because of the sheer volume of work that I've been doing on this topic with our members.
It's definitely nonstop. And thanks, Mark. I think that's helpful, particularly after Senator Bragg's announcement this morning. I think it's good for people to begin to understand a little bit about what's happening in terms of the regulatory space and get a sense of there might be a perception, and Mark spoke about that governments are late to this space, whether it be in terms of their own developments or in creating certainty in the regulatory aspects. Sorry about that. Just a little time to make sure we keep on track. But a great person, in fact, to tell us a little bit more about what's going on in the regulatory space is Sian Jones. I'm really excited to introduce Sian. Sian is a senior partner at the boutique crypto asset policy and regulatory affairs consultancy, XReg Consulting. She has extensive experience in policy formation, regulatory framework development, and implementation that is leveraged both by governments and public authorities in helping shape policy and by industry in formulating regulatory strategy. Sian has a background herself as a regulator at the Gibraltar Financial Services Commission, as a senior advisor on DLT, and has previously architected Gibraltar's DLT regulatory framework. So I know I'd love to hear more about that and also more about what's going on in the space and some of the more recent things she's been working on. So Sian, over to you.
There we go. We all make that mistake once a day, don't we?
Someone's got it.
Thank you very much, Caroline, and good day to you all, which is, I think, probably appropriate to everyone, both in Australia as a welcome and also to everyone around the world. And congratulations to Blockchain Australia in having assembled this this event over these days. So thank you for mentioning Gibraltar, because I like to think that we were one of the first jurisdictions to have a comprehensive piece of legislation, albeit a very small jurisdiction, but a very nimble one. And certainly we were able to architect something which was both, which would both stand the test of time, but would also be appropriate to the technology. When we brought it in 2017, we've been licensing folks that today would be called virtual asset service providers, although the time that term hadn't existed. We've been creating licenses for folks that are equivalent to licenses in any other financial sector, but we took a slightly different approach because of our recognition of the not only the rapid pace of change in this technology and in the products and services, the industry and what it was delivering. We also recognized that it would look very different. We'd be rewriting the rule book effectively every 3 months if we took a more traditional approach. So we took a principles-based and outcomes-focused approach to regulation, which I'm saddened to say, now that I'm not in the public sector anymore, hasn't necessarily been applied more broadly. There's this tendency towards moving back to traditional forms of regulation that really fit the kind of regulation that was built for banks and traditional finance, and doesn't necessarily fully leverage the technology itself, nor try to find the right balance. But I had a slide on 2 years ago at a conference called the V20 that I'm sure some of you were able to attend. And the slide said, wake up, smell the coffee. Crypto is now part of the global financial system. And as we've seen over the last weeks and months, crypto is about to be and is now being regulated thick and fast. Let's just think of some examples around this. FATF, which is the Financial Action Task Force, it sets the standards for countries, all countries around the world, in relation to the way that they're able to tackle money laundering and terrorist financing and proliferation financing. And they set the rules that countries in the end have to harmonize and implement into their own national regulation. They brought out an extension, if you like, a clarification which brought virtual assets and virtual asset service providers into scope of the world's anti-money laundering regulation. And that's now being implemented thick and fast by countries around the world. It took a little while. Countries have to change their legal systems, have to change their regulatory regimes, but that is happening across the piece and with ever increasing rapidity. So, you know, within the next year or two, there will not be a country anywhere in the world that will not have AML CFT regulation for its service providers. And what's been made clear in a recent update is that those that you might have thought of just being virtual asset service providers, those intermediaries, that interpretation has been broadened out tremendously to include a whole range of folks, including in some cases those who deploy DeFi projects. And so the pace of regulation is, albeit behind the pace of the technology, but it is rapidly catching up. I think one of the things that's probably most needed in these coming months is increased dialogue, much more effective dialogue between all stakeholders. It sometimes feels like the battle lines have been drawn, if you like, between policymakers and regulators on one side, trying to catch up and make sure that bad stuff doesn't happen using crypto, and the crypto industry on the other side that is seemingly every week coming up with something entirely new, entirely different, and very challenging. What there is an absence of is true dialogue between all the stakeholders. And by that, I mean the policymakers, the people who put things like MiCA that Marc's been talking about before legislators, the regulators themselves, the legislators, the standard setters, service providers, token issuers, developers, technical solution providers, and most importantly, users. And that genuine roundtable discussion, those discussions are not yet taking place, and they're going to be needed if both regulation is to be proportionate and service providers, the industry as a whole, and users understand that regulation is necessary to perform certain public good. That balance isn't yet taking place, and I put a call out for all to participate and work hard to exchange information and engage in that dialogue.
Sian, I'm going to jump in there. I want to ask you, you mentioned something, you know, that since the work that Gibraltar did, including while you were there, that regulation, the governments perhaps haven't seized the opportunity to sort of either keep pace or use the technology itself to assist with sort of reg tech, subtech. Why do you think that's the case? I mean, you're someone who's seen it on the public sector side, now working on the private sector side. You know, why haven't we seen those developments yet?
I think there's a great deal less appetite for innovation in approach, imagination, you might say, on the part of policymakers. Bear in mind, regulators are the people who have to implement the policies. So it all starts with the people who set the policy in the first place. And there's always this tendency towards what you know and being comfortable with it, and not necessarily a preparedness to be experimental, to try new things. And I think that's one of the reasons that often regulation is founded so much in stuff of old, in last century's technology, rather than harnessing the innovations that are available in order to regulate. I think that is missing because, frankly, I think policymakers are a little scared.
Okay.
They know what they know. They don't know what they don't know, and it's a scary place if you don't understand that stuff. That's why I speak so often about dialogue, because actually you can get policymakers and regulators to understand better if they engage in that dialogue.
I think that's good. I mean, sort of education piece is a big part of it. And I think you also, I mean, there is a cultural gap between what you have in the private sector and the public sector for good reasons. I think there is a hesitancy, but I think governments and their policymakers are entrusted to create a framework that works for all and takes into account. Perhaps they don't have the same culture or even liberty to take the risks when the consequences of taking those risks on the public sector are probably more significant than in the private sector. But that's something we can perhaps come back to, because I think it's quite an important point. But I'm going to hand over now to Anson, and Anson Zeall is the chairman of Access Singapore and also co-founder of IDAXA. He's actually going to pick up on a few things that we've heard from Sian, because as the co-founder and chairman of IDAXA, which is the global voice for the world's virtual asset associations and service provider, Anson really has been at the heart of the discussions relating to anti-money laundering and countering the financing of terrorism rules as they apply in the virtual asset space. Anson launched the Open VASP initiative and the joint working group to form the InterVASP messaging standard to comply with FATF's travel rule. He's also a member of our very own OECD's Blockchain Expert Policy Advisory Board, and he's been a great asset in that regard as well. But Anson, I'd like to turn over to you and hear about a little bit more about what's happening on the FATF AML side of things and what we might be able to expect there going into the future as well. So over to you.
Thanks a lot, Caroline, and very big congratulations to Steve and team for this excellent event from Blockchain Australia. One thing I like to say is I like to speak after Sian all the time, because she already spoke 50% of what I need to say. And now I just need to give a more deep dive into what's happening in the private sector side. But one thing I want to say is I'm by trade an entrepreneur since 2013 in the blockchain space. But since working with associations, working with governments, I can tell you that regulation really sucks the entrepreneurship and innovation out of you. This has, when I look back on the last 7 years, you can see that that's been happening. And I can sort of empathize with regulators why it's important to bring them out from their fear and work together. Because if they just think inside their box, then they are making a lot of assumptions on what's going on inside the industry. So linking to what Sian said, I will give you the private sector view on working towards the initiatives that FATF has written out back in 2019. So back in 2019, some of you may know, especially when if one of you guys are running a VASP, a virtual asset service provider, like exchanges and so on, FATF has put out guidance on how to fulfill what banks call the travel rule, meaning that the service providers have to share information between each other of their clients, and all sorts of information in between, and most of the details are in the guidance. Private sector immediately started working together to come 1 month after to work on the conference called V20, as Sian has mentioned. We were trying to basically send the message to regulators that we are willing to come together and work together. And not only that, a few months later, we then start working on standards. And you can see that from competition between the different VASP, the VAS actually come together to do something and did come out with that standards. But there are many facets on why things have sort of stalled. Okay, so we've been speaking to different regulators, also speaking to FATF as well, also the co-chairs of FATF. One thing has been very clear to me, that it is becoming a chicken and egg game, where the VASP now are very prepared on complying with the travel rule standards. Solution providers are also here, and they are ready to onboard all these VASPs. But there is a reason why the VASPs are buying time, and that is there's only 2 countries in the world, with the licenses that are applying full global travel rule compliance. Right now, there is only Singapore and Switzerland, okay? And because there's only 2 and the other countries are not coming together, there is the incentive to actually comply for businesses is very small, especially if we add the population of Singapore and Switzerland is less than 14 million people, but the large economies are not in the game. So and it's from the business perspective that there isn't an incentive to comply and increase the compliance cost. This was a point I actually brought back to FATF, that we need to find a way, instead of thinking what they call a sunrise issue. Sunrise meaning this whole industry where different regulators are at different pace, saying that it's a lingering problem. We need to hit the problem right on, instead of thinking that it will continue. Because right now, not only that, we have the solution providers that work their way on building up these travel rule solutions are now starting to run out of money. Okay, and then if these travel rule solutions to help these VASPs start running out of money, we are now back to square one. So we have a compliance, we have a communication problem with the regulators, and I think tonight's meeting with FATF, we definitely need to find a chance to address this. But definitely that there is a lot going on in the regulatory space. But one message I want to tell the entrepreneurs is don't get sucked in by regulation. You must continue your work, but at the same time, understand that the regulations are coming behind to, I won't say haunt you, but you will be inside the net quite soon.
Thanks, Anson. That's really helpful, and I think a very good point that in fact, in terms of actually translating the FATF rules into domestic law, in fact, you've only got a couple of jurisdictions who have managed to do that to date. Again, what is the, what's stopping the rest of them? Is it a lack of understanding of the technology and how to translate it into domestic? Is it a case of regulatory arbitrage? What do you think is going on there?
Okay, so this part is personal opinion, analyzing what's going on. I am feeling that FATF is providing this rule book, but without the support of onboarding all these different regulators. You can't expect, for example, Singapore and Switzerland to study and research the amount of blockchain technology that they have to be applied in a country like, no offense, one of the FATF countries like Saudi Arabia, for example. Okay, many countries are at different pace with different interests right now, and I see that because of the different interests, this is where the problem is. But because of the different interests, it's hurting many of the players around the world. So one simple example would be a small exchange in Indonesia. Okay, they need to comply with the travel rule, and they realize that the funds actually came from Coinbase. But if you go and knock on the doors of Coinbase, they won't answer you. They won't have the time, and they don't know if you are a real company or not. So if regulators were to come together, it would be good somehow. Maybe we need a layered approach on regulation rather than dump the whole guidance on a country. Because if you have, let's say, a small layered approach, getting the emerging markets to register rather than regulate, this is just an example, at least we can get the 2 regulators to talk to each other and link up the different VASPs. Right now, there is no communication. It's very hard to implement for the emerging markets, speaking to the developed markets.
Okay, and I think that's an interesting point. I mean, your ask is sort of for international standard setters to provide more guidance and assistance to jurisdictions in that process of implementation, particularly, as you say, in developing markets, which maybe don't have the kind of human capital and resources to be able to make that translation themselves. And we're going to turn now, and I'm going to come back to all of you because I want to talk a little bit more about DeFi and what that means for regulation. But before we do that, I'm going to turn to somebody who is working in one of those jurisdictions that Anson just mentioned, Ekaterina Anthony. She works in the Council for the CryptoValley Association of Switzerland. She is the DLT team leader there, and she's also acting as a board member of the association. She's represented in IDAXA, so working also with Anson, and co-chairs the AML task force in regulatory group. So this is obviously you can see from the arc of this discussion that one of the areas where we have seen regulation really come to the fore first is in this AML CFT space. And I'd love to hear from Ekaterina now about your experience, what the landscape is like in Switzerland as one of those jurisdictions that Anson mentioned, which has now fully implemented the AML CFT standard set by FATF. So over to you, Ekaterina.
Thank you very much, and I really appreciate that you invited us to represent Switzerland. I'm absolutely with Anson and Sian on the regulatory situation, and that we all need more consolidated open dialogue jointly. So in Switzerland, we have an ecosystem which is a 7,000 people ecosystem with 150 members and with good international coverage. And just to give you a high-level summary, we have two first official legalized crypto bank in Switzerland. We have Open Vast Protocol Protocol, which actually has a similar situation what Anson just described, where we need more dialogue with regulator in order to push the project and scale it. Our Swiss stock exchange list crypto products. Swiss cantonal banks were very, very conservative and traditional, looking on how to leverage from growing interest to crypto. And universities in Switzerland are providing certification on blockchain specialists. At the same time, as it already was discussed, we have this really big sunrise cross-border scalability issue, where Swiss AML regulation is probably the most strict one. We just already mentioned Singapore as well. It's just two probably countries where we have financial intermediaries who are not allowed to deal with third parties. The clients, for example, with crypto should be identified, and the crypto asset must be whitelisted before any transactions can happen. And this brings a lot of uncertainty how we can cooperate with the other countries, and we address this issue also to FATF. So as to give you a short summary of the regulatory approach in Switzerland, at first stage, Swiss regulator FINMA have taken very explanation approach, where we had a lot of clarification on the applicability of existing legal instruments and how actually we should understand the ICO, what type of tokens exist, and actually also explain the stable coin nature. Another approach which our regulator have taken recently, retrofit approach, where they amended and expand the scope of the existing laws. And actually it's a quite good approach because the whole legal base is adapting gradually for the needs of DLT industry. So I'm talking about civil, bankruptcy law, banking, IML, and other. And this approach, for example, differs from bespoke regulatory approach that has been implemented in Liechtenstein or Malta, for example. And often when we talk about crypto assets, first we have in mind, of course, Bitcoin and how much it's worth today. But in fact, we have a lot of new changes, and I would say that the top news probably for 2021, it's our DLT Act, which had been recently amendment, and now in Switzerland, starting from 1st February, it's possible to register shares on blockchain. And for example, now today, a shareholder of the company can independently own and transfer the digital shares without a bank intermediary in custody. So I would expect that security tokens are going to surge 2021 due to higher regulatory clarity and rising involvement of institutional investors. One more thing, maybe just at the, just to finalize my short speech, I would like to bring is the remaining changes in the Swiss DLT Act that we expect 1st of August to come in force. The key changes concern a few financial market infrastructure authorization type DLT trading facility as a new marketplace. So what it will bring, it will allow to create crypto exchanges that can onboard retail investors and provide full type of services and instruments and trading. And just to finalize, I would say that in general, Swiss regulator is very open. We as a regulatory consulting companies or market private sector providers, we have really open dialogue. We can just call and ask and get feedback, and we work quite actively on implementing and amending the laws. So, and I also wish we can have the same open dialogue with FATF and get to be heard because just now today we have the final meeting with them in 1 hour, I think, in a couple hours, and we provided from association and from it on the DAX level, so where we also work with Anson, we provided quite a lot of comments and wishes and conclusions what should be improved, and I hope that we will be heard as a representing the big organization on the country levels and globally.
Thanks, Ekaterina. And a prediction there that we expect to see more action in the security token space due to developments like we've seen with the DLT Act in Switzerland, which was really, something quite comprehensive. And in addition to what's been done, of course, on the AML/CFT side, I think bringing a lot of clarity into that space. And we'll be interesting to see now, where developments like those proposed by Senator Bragg this morning for a regulatory framework in Australia, how much they draw from some of the other examples we've seen around the world, both Switzerland's DLT law or the proposed MICA Act or other aspects of the digital service legislation, which Marc outlined to us. But there's something I want to turn on, which we haven't really touched a lot on. But before I do that, I will just invite the audience, if you do have any questions, now is your chance. Please put them in the chat. We will make sure that we get to them before the session is over. But while you're doing that, I just want to turn back to you all and ask you a little bit about DeFi. It's not something we've talked about yet, but in particular, I want to think about DeFi and what it means for policymakers and regulators. Is this a space that we can expect to see continue to grow? Do you anticipate that it will begin to develop the sort of retail levels of trading that we're now seeing in perhaps a traditional crypto space, or do you think it will continue to be a relatively niche market? And if that is the case, that it does continue to grow, what is realistic in terms of regulatory approaches to managing this space? Can we continue to apply traditional regulatory approaches to fully decentralized systems like we're seeing in the DeFi space? So maybe I'm going to turn back to start that off to Marc.
Yeah, thanks, Caroline. So, DeFi, will it continue? Will it grow? I think the answer is yes. My personal view is that decentralized finance, blockchain, cryptocurrencies, that's it. If you'd asked me in 2013, I was just having the conversation this morning, I would have had a slightly different opinion, which was that, maybe the pace of evolution would slow. Maybe even there was an opportunity that things might be thwarted, they might be changed, they might even be stopped. But I think we're past that point now. This is happening. The momentum is there. It's not because just the innovators are demanding this, but the audience, the consumers are demanding this innovation. They are buying these products. They're engaging with the decentralized finance applications that are being created. And if you just look at the amount of funds that are locked into value in decentralized finance, as we look back historically to 2020, we were talking a few tens of millions. And as we look at April, we're talking $60 billion in locked value. Now, that number is interesting because, of course, it provides a headline, and we all love big numbers, right? As innovators, as entrepreneurs, the big numbers give us justification that we're involved in the right projects, things are going in the right direction. But I prefer to look at these big numbers as something more. This is a way of maintaining the market, because the more capital gets locked into this innovative area, then the greater access that provides to both innovators, interested parties, and finance and capital to those consumers. And if you look at some of the applications in decentralized finance that go beyond just making people rich, look at some of the functions that are being brought out into the developing world around access to finance. Suddenly you've got this intersection of the provision of liquidity and finance to small actors, maybe small, very small agriculturalists, niche producers in developing countries who are excluded from traditional finance systems. They can now, using nothing more than a relatively dumb smartphone, gain access to supported ways of taking liquidity into their production process so that they can keep working their micro approach to farming. And these are very real applications that are coming out of the decentralized finance movement. So will it continue? I think it will. And the reason it will continue is because consumers are consuming this. There is a demand for it. The innovators have spotted this. But what will regulators do? I think they'll struggle to catch up very slowly. And just to go to a comment from Simon C in the chat that we're having offline. Yes, my comments were quite general, Simon, but I think regulators are not making best use of the technology. So as opposed to the example you use with self-driving cars and drones, there is an opportunity here for regulators to make use of the consensus mechanisms, just as one example. For the first time in history, to place regulators at the center of the business process, at the center of the business logic, to participate in that consensus mechanism such that if they see undesirable activities, they can actually prevent them from happening, instead of relying on acts that were passed. And I'm just going to look up the date, because not being a regulator, Sian is the lady that I need on side here to remind me. But the Bank Secrecy Act from 1970. I mean, for goodness sake, really? 1970s? That's almost as old as me. And we're trying to apply something like that to decentralized finance? Really? And Title 3 of the Patriot Act, okay, that's more recent, 2001. Or we could go, back to more recent history and say, what was coming out of FinCEN in 2018. The point I wish to make here, without laboring it too much, Caroline, is that regulators are not making the most of the technology to keep pace with this market. And back to Sian's point, there isn't a huge amount of engagement, active engagement with the industry. And that's what's really lacking, because the industry, as you will know, Caroline, and many of the listeners on this event today, is quite an open industry. There are code repositories on GitHub. You can access the code if you so desire. You can talk to the coders themselves, because they now work in an open environment and they're very used to sharing. Gone are the days where everyone developed everything in dark rooms with pizza pushed under the door, lest they give away their competitive advantage. Competitive advantages these days are no longer based on what you know, but how quickly you can understand what's going on and iterate to meet consumer demand. And what that means is there is a lot of willingness, a lot more willingness than there used to be, to educate, to provide access in an open and collaborative way. And I think, as well as not making use of the technology themselves, with the example, perhaps, of making use of the consensus algorithm that certain protocols allow, and baking that into a regulatory approach, there is not a high appetite that I see of engagement from regulators to really learn and to keep that knowledge at the pace of innovation that the market is being able to pull forwards. And that is the big difference between what's going on in the DeFi space and what currently we're seeing trying to happen in the rather rear view mirror approach that we see coming from regulators. And I don't mean that in a derogatory way. It's just they're using mechanisms and approaches and processes, you know, heaven forbid, from the 1970s, or even if we're, you know, slightly more compassionate, from 2001, or if we want to be really generous, from 2018. But as we've seen with DeFi, just from January to April, you know, that market's gone from 20 billion to 60 billion. So if you really want to stay in touch, you have to jump in and get involved, because the information is there and the willingness to engage is there.
Yeah, sorry about that, Mark, just conscious of time, but I sort of think that the point you make about the importance that regulators and the opportunity they have to, I guess, be part, you know, embed the regulation in the technologies is obviously there, but it's something that we're not yet sort of realizing. And I think that's also true in terms of thinking that tradition, you know, there's a principle-based approach to regulation, and therefore, you know, there is one perception that, well, there's no need to change the regulation because it's principle-based. And I think what we have with DLT is we'll often see that, in fact, DLT challenges some of those considered to be tech neutral approaches, which in fact, when you think about the structure of decentralized systems, actually don't really apply to this ecosystem, particularly these decentralized products where you simply don't have the same intermediaries and the same, you know, stakeholders in the ecosystem that you have in the traditional space. And even in the more traditional crypto space, like crypto exchanges, and with them as the intermediary, we've still even seen there the challenge of something like the travel rule. But that might, Sian, I know we've only got a few minutes remaining, so if I could just ask you in 30 seconds or so, what would you like to see in this space, whether it be on the DeFi front, your sort of one top priority request for the coming year for global regulators?
I'll start with a quick answer to that. That's real dialogue, not speaking to each other across a room, but actually sitting around a table and being prepared to discuss. And if that gives me 10 seconds to pack an awful lot into the last question about DeFi, I think it's fair to say that a lot of what is labeled decentralized isn't. If you're someone involved in DeFi and you're asking the question, are you regulated, then you probably aren't in truly decentralized space. Regulators are not adequately responding. Look at FATF's interpretation expansion, which says that even if you're a coder or somehow making money now or in the future out of a decentralized project, you are a virtual asset service provider. Or MiCA's requirement for all issuance, token issuance to be undertaken by legal entities. So I would urge, echo something you've just said, and that is essentially one needs regulation by design. In other words, build it in rather than try to build over it and lock it down. Recognize that technological neutrality doesn't exist. It's nonsense. It really, to Mark's point, the regulations as there is written today were written in a context of what the technology was at the time it was written, and now it's different. And my view of what's likely to happen is a bifurcation. You're going to see the industrialized DeFi space, which has got intermediaries and probably really isn't DeFi in that sense. And you're going to find a lot of very clever people doing a lot of stuff, going back, if you like, to the roots of crypto. But there isn't time to go into that. But I'll leave you with those thoughts. Thank you.
No, that's a great point, Sian, and they're just challenging a bit this idea, Mark, said that, you know, there is an openness in the industry, but we can't forget the origins of this space, which is very much a challenge to governments, as a challenge to the traditional finance way of working. This, I mean, this did come out of the global financial crisis. I don't think we can forget its origins there. So Anson, just over to you. If you can let us know what is on your wish list. Dialogue, obviously, you know, valuable dialogue, but anything specific that you would like to see come out in the next year or so from regulators? We might have you on mute, Anson.
Sorry, now my mistake. So very, very short context before I give the answer. Basically, what I'm seeing now, I spoke to a FATF regulator recently And also in the previous meeting, he said that because of the guidance in 2019, there was a flight to DeFi. We recently had a call and I actually corrected him and said, we didn't have a flight to DeFi, but it accelerated the initial mission of the whole industry to DeFi. Okay, because that is actually the end goal of where the whole industry is. The crypto exchanges, like it or not, is a means to an end. So what that means is we need to really rethink the whole space rather than thinking of the existing rules and activities, because the same activities in the DeFi space, the stakeholders are actually very different. Like Sean says, yes, some of them are having a double whammy. They're half centralized, half decentralized, and they should be regulated, which is fine. But there are full decentralized companies. And if we regulators really go and clamp down on just widening and really basing this out of fear, they can all become Satoshi very easily. And we do not want that to happen. I think a harmonization by really going to dialogue, not just talking, updating, but we can even show them the exact examples on how things work to get them to understand. From my DEXA standpoint and all our associations, we're very willing to do this with the regulators.
Thanks, Anson. And Ekaterina, over to you. You're working in a jurisdiction which has already made a huge amount of progress on the regulatory front. Is there something you'd like to see, whether it be in Switzerland or more globally?
Well, I think we need harmonization of the global standards that we can do cross-border transactions, but also back to what Marc, Anson, and Sian discussed. I agree that traditional ways of the pricing and putting crypto world, DLT world into the compliance frames of the traditional will not work. The regulator need to understand how technology work and benefit from it and give possibility of development of the private sector and private wallets. I'm very worried what will be the future of the private wallets, and that, as Sean said, we smart people will find a way to find the new, level where they will function and develop the industry. So regulators need to be very careful at the moment, and we need open dialogue.
Thank you very much, Ekaterina. So today, everybody, thank you so much for joining us. We have focused a lot on AML CFT, but that is because it's one of the spaces which was regulated most early on in this ecosystem. But I think a lot of the issues that we've picked up do apply to other regulatory developments that we're going to see in this space, whether it be on the tax front, on digital asset markets more generally. And so I think some of the lessons that we're hearing about here, the importance for a really in-depth quality dialogue and using seeing the technology as part of the solution, not just part of the problem, I think really has something that we can learn from the AML CFT experience. But thank you so much for the speakers for joining us, Marc, Anson, Sian, and Ekaterina. Thank you very much for sharing your knowledge. Their details, of course, are in the chat. So if you'd like to follow up with them directly and ask them any questions, I encourage you to do so. Thanks very much again for the team at Blockchain Australia for making this event happen. And once again, appreciate all of you for being with us. Thanks very much.
Thank you.
Thank you.
Bye-bye.